We've been talking about Obama advisor Laura Tyson's comments that a second stimulus package may be needed, but not everyone agrees. And Douglas Holtz-Eakin is president of D.H.E. Consulting and former director of the Congressional Budget Office, and he joins us now from Washington, D.C. Doug, great to see you, and thanks so much for joining us.
Good to see you.
Earlier I was talking to Mark Zandi, the economist at Moody's Economy.com, and he was saying that it's just too premature to say whether or not we need a second stimulus plan. I mean, do you agree with that?
Oh, I certainly agree with that. I mean, if you look in particular at the kinds of infrastructure spending that Laura Tyson suggested we should do more of, this is the same spending that was widely understood at the time the first bill passed, that it would take years to implement. And the notion that somehow we're not doing as well as we could, so we should go back and repeat that very slow stimulus doesn't make a lot of sense. We should hold off and really be cognizant of the fact that the U.S. has got a very daunting fiscal outlook, and we can't afford to be spending money without thinking hard about what we'll get for it.
Well, how long should we hold off, though, Doug, before we start looking at the benchmarks for progress in this plan?
Well, you have to remember that one of the fundamental premises of the whole stimulus plan is the idea that you can manage the economy and hit unemployment targets with some kind of precision from Washington. That's just really not the case. What we really have is a recession and recovery that's going to be characterized by asset market movements. Housing values continue to fall. A lot of people have taken great hits on their stock market wealth, and there's a lot of indebtedness out there. There's nothing about stimulus that fixed that. So we're going to be faced with a situation where households are going to rebuild their wealth. They're not going to spend that much. We should be focusing on the other players in the economy, the business investment, the opportunities for exports. That's a place where you can get some sustained growth and lift in the economy. But
what I'm hearing from some people, though, is, and correct me if I'm wrong, is that when we were talking about the stimulus back earlier this year, the stimulus plan was going to create jobs. It was going to try to keep our unemployment rate below 8% or 8% or below. And now we're looking at an unemployment rate of 9.5%. So you can kind of see why people are now starting to question, well, what has happened with this stimulus plan?
And certainly they should. I mean, the bill as passed was not a good stimulus bill. It had all sorts of long-term spending that wasn't going to come online very quickly. It was very, I think, short on the kind of immediate impacts that you get out of tax cuts and bigger help to state governments. So you could have done a $400 billion smaller package that hit in the first year and gotten a much better impact.
Okay, well, too late for that at this point, right, Doug? Okay, Doug, we'll be back with you after the break to talk about the pace of spending and also other aspects of the stimulus plan. So we'll be back with Douglas Holtz-Eakin talking about the possibility of a second stimulus package. Well, we're back with Douglas Holtz-Eakin. He is president of D.H.E. Consulting and also formerly with the Congressional Budget Office. And Doug, continuing a conversation about a second stimulus program. I mean, getting to this one, though, the current one, are we ever going to be able to get a handle on what the stimulus package has done in terms of creating jobs at all?
No, because we'll never know what the world would have looked like without the stimulus package. So this is going to be fodder for 10,000 Ph.D. dissertations and a lot of political conflict. But I think the reality is we'll never be able to put numbers on exactly what the impact was. I think a better way to think about it is think about the pieces of the stimulus package and what they fit in the way of the principles you'd like to use to conduct policy. And so, at least to my eye, there's much too much in there that is permanent spending. Stimulus is about turning things on and then off. There's much too much in there in the way of accumulation of large debt for the next generation. And so it doesn't fit the principles I'd like to see, and I'm pretty sure we could have done better if we'd done it differently.
Okay, I mean, and that can be disturbing for some of us who were sold on the package because it would create jobs. In that sense, how do we know then what's the basis for a second package?
Well, I think we should be skeptical of the second package. One of the things that we're seeing is that this bill is, in fact, executing about as it was expected to. There were some immediate transfers to state governments. That was a patch. State governments are in terrible shape and need to get their fiscal house in order. There were some slower education spending, and that's going to take a long time. And there were tax cuts, and that's gone out. So everything's worked the way it was supposed to, by and large, but we're not seeing a big impact on the economy. I think that tells you the limits of the ability of the government to run things from Washington. You really have to get the private sector moving, and that's it.
Okay, Doug, great to talk with you on this, and thanks so much for joining us. Douglas Holtz-Eakin, formerly of the CBO, and also with D.H.E. Consulting.